Stop everything you are doing right now. If you own silver and you are thinking about selling today, you are about to make the biggest financial mistake of your entire life. What you are watching is not a market crash. It is a robbery, and you are the target. I am going to prove it to you in the next 15 minutes. And when I am done, you will never look at this market the same way again. Monday, February 2nd, 2026. The day they tried to break you, silver down 36%. In one session, from over $120 to $83, gold smashed 13%, trading around $47.50. Your portfolio is bleeding, your account looks like a war zone, and every talking head on financial television is telling you the same thing. It is over. The bubble popped. Cash is king. Kevin Warsh is here to save the dollar. Get out while you still can. Let me be crystal clear about something. This is psychological warfare. They are not reporting the news. They are creating the narrative. A narrative specifically designed to make you panic, to make you sell, to separate you from the only asset that can protect you from what is coming. Look at the price action. Does a 36% drop in 24 hours feel organic to you? Does it feel natural? You really think every silver holder on planet Earth woke up Monday morning, read a headline, and decided to dump their entire position at the exact same moment? That is not how markets work. That is how ambushes work. This was coordinated, calculated, executed with military precision at the moment of maximum vulnerability. They waited until Asian markets closed, waited until London had not fully opened, waited for the liquidity to be at its thinnest, then they struck. Billions of dollars worth of paper contracts dumped onto the market in milliseconds, not physical silver, paper promises. And while you were panicking and watching your screen turn red, they were standing at the bottom with buckets, buying everything you were selling. At $83, you got played. And if you sell today, you are handing them exactly what they want. Let me show you exactly how they did it. Because once you see the weapon, you will never fall for this trick again. Futures contracts, that is the weapon. A futures contract is not silver. It is a bet on the price of silver. A paper promise that says, I will buy or sell silver at this price in the future. Here is the part that should make you angry. You do not need to own any actual silver to sell a silver futures contract. You just need a small margin deposit. And if you are a major bank, a market maker with access to the exchange, you can create these contracts out of thin air, infinitely. So at 3 a.m. New York time while you were asleep, they flooded the market with thousands of these paper contracts. Milliseconds, algorithmic dumps. The computer sees a massive wave of sell orders and interprets it as panic. Price drops from 120 to 110, then 100, and that is when your stop loss gets triggered. You set a stop loss to protect yourself, right? Smart move, except they know you did that. They know exactly where those stop losses are sitting, and they engineered this crash specifically to trigger them. Price hits 100. Your stop activates, automatic sell. That pushes price to 95, which triggers the next wave of stops, then 90, then 85, then 83. Domino effect, liquidation cascade, waterfall. They did not have to sell all the way down. They just had to push the first domino. Your own risk management did the rest. They weaponized your fear, used your protective measures against you, forced you to sell low so they could buy low. And while the paper price was crashing, what happened to the physical silver? Did mines suddenly produce more overnight? Did solar panels stop needing it? Did industrial demand vanish? No. Nothing changed in the real world. Only the paper world changed. They disconnected the derivative price from physical reality, and they are betting that you are too scared to notice the difference. But a heist needs a cover story. They cannot just admit they manipulated the market. So they gave you Kevin Warsh. The narrative is perfect, simple, seductive. Kevin Warsh is the new Paul Volcker. Hard money sheriff, going to drain liquidity, save the dollar, crush inflation. The adults are back, the party is over, cash is king. This is a lie, and I'm going to destroy it right now with basic math. In 1980, when Paul Volcker raised rates to 20% to kill inflation, the United States debt to GDP ratio was 30%. National debt was under $1 trillion. Today, debt to GDP over 120%. National debt $38 trillion. You cannot run the Volcker playbook when you are drowning in debt. It is mathematically impossible. Every 1% increase in interest rates adds roughly $380 billion to the annual deficit. If rates stay at 5% or higher, interest payments alone consume nearly all tax revenue. The government would have to borrow more just to pay interest on money already borrowed. Death spiral, Ponzi scheme that only survives if rates stay low and money keeps printing. Kevin Warsh knows this. He is not stupid, he is a banker. So what is he really doing? He is creating a deflationary crash on purpose, not to save the dollar, to justify the biggest money printing operation in human history. Think about a coiled spring. To make it explode upward, you compress it first. Push it down hard. That is what they are doing right now. Compressing asset prices, gold, silver, stocks, everything. Why? So when the system cracks, when bond markets freeze, when treasury auctions fail, Warsh can pivot and say we have a crisis. Deflation, markets collapsing. We must print to save the system. He is manufacturing the problem so he can be the hero who prints the solution. This crash is not the end of inflation. It is the setup for hyperinflation. The moment those printers turn back on, that spring releases, with the force of $38 trillion of unpayable debt behind it. So, when they tell you cash is king, here's the translation. Cash is king for maybe 15 minutes, until Treasury realizes they cannot pay bills. Then cash becomes trash. And we go from deflation to currency collapse overnight. Do not fall for it. Now let me show you what is really happening while everyone watches screens. Physical silver is vanishing, not dropping in price, actually disappearing. Dealers sold out, mints backed up, premiums exploding, $40 to $60 over spot in some cases. Paper says 83, street price is 120 or higher, and even at 120 you might not find any. This is Gresham's law playing out in real time. Bad money drives out good money. The bad money, paper contracts and fiat dollars, is being weaponized to attack the price. But that attack is forcing good money, physical metal, into hiding. If you own silver and the screen says 83 but you know it is worth 150, you are not selling. You are holding, taking it off market, hiding it. Miners stop selling at a loss. Refiners hold supply. Dealers lock vaults. The lower paper goes, the less physical becomes available. Crash does not create abundance, creates scarcity. And while mainstream media screams sell off, reality is a bank run. Massive physical withdrawals from exchanges, metal moving out of registered vaults into private storage, shadow vaults in Switzerland, Singapore, Caymans. Once it goes there, it is gone, off-grid, out of system forever. Here is the ultimate irony. By crashing price to make dollar look strong, they are actually accelerating dollar system death because they are letting smart money drain collateral at massive discounts, emptying vaults to create temporary deflation illusion. But once vaults are empty, once nobody will sell at 83, game over. Price does not recover. It detonates. I want you to do something right now. Pull out your phone. Try to buy 1 ounce of physical silver for $83. Go ahead, I will wait. Screen says that is the price. CME agrees. Wall Street Journal agrees. CNBC agrees. $83. So you should be able to exchange 83 paper bills for 1 ounce of metal. Call your dealer. If he answers, he will laugh in your face. He will tell you one of two things. We are sold out, or we have inventory, but price is not 83. It is 120. Welcome to unobtainium. Spot price, that 83 on your screen, is the price of a paper promise that settles in cash. Street price, the 120, is the price of reality. That premium is not a ripoff. It is truth. Dealer telling you paper market is broken, cost to acquire actual metal has not dropped. It went up, because at 83, mines shut down. No miner will blast rock, crush it, refine it with chemicals just to sell at a loss because some New York algorithm had a bad morning. They withhold supply, vault the metal, sit on keys, want it for 83? Dig it yourself, supply freeze, mines not selling, refiners not selling, wholesalers not selling, yet paper market claims price crashed. Phantom price, hallucination. Ferrari dealership with signs saying Ferrari's $10,000. You run in excited and salesman says, sorry, no cars. But we can sell you a picture of a car for 10 grand. That is paper silver right now. Picture of a car. And they know they will never deliver the actual vehicle. If this were real bear market, dealers would be flooded with inventory, people lining up to sell grandmother's silverware for cash, premiums would be negative, you could buy below spot. Opposite is happening, phones ringing off hook with buyers, physical market dried up, you cannot buy volume at this price. Try ordering $1 million of physical at 83 per ounce. Dealer website crashes. Order rejected, metal is not there. Cash is only king if it can buy things. If you have cash but cannot convert it to the asset you need because market froze, your cash is worthless. Expired coupon. And this is where trap closes. Retail sells paper silver scared of 83 number, gets cash. Week later realizes crash was fake, tries to buy back. Premiums higher, or price snapped back to 150. Sold low, cannot buy back, priced out forever, washed out of only asset that protects from coming debt spiral. That 83 on screen is a ghost, does not exist in physical realm, number generated by computer to scare you. Do not fear ghost, fear empty vault. Fear the day coming soon when paper market admits defeat, declares force majeure, has no metal to deliver. That day, price does not just rise, it goes no offer. Priceless. Everyone asking, where did 12 trillion go? Market cap drops, red percentages, people screaming money evaporated. Wrong question. Money does not evaporate. Energy neither created nor destroyed, just changes hands. 12 trillion was not destroyed, it was stolen. Transferred from weak hands to strong hands. Greatest wealth transfer of decade. One side of river, retail investor, guy who bought paper silver last week on hype, looks at phone Monday, down 36%, scary headlines about deflation, panics, hits sell, takes loss, moves to dollars, just traded 5,000-year store of value for fiat being debased by minute, because charts scared him for 6 hours. Other side of river, whales, central banks, insiders, not looking at charts, looking at value. Paper crash to 83, physical fundamentals unchanged. When retail sells paper contract, whale buys, then demands delivery. Paper contract becomes ticket to drain physical vault. Your panic subsidizes their accumulation, selling insurance on burning house for pennies. They buy with smile. 12 trillion did not go to money heaven, went into pockets of people who engineered crash, want to beat them, do what they do, not what they say, ignore paper price, look at physical reality. At 83, silver is unobtainium, does not exist. Try to find it, I dare you. You are at crossroads right now. 2 paths. Choose carefully. Path A, believe lie, sell hard assets, take cash. What do you get? Currency backed by 38 trillion debt. Currency guaranteed to lose 15% purchasing power yearly, even if Warsh pretends to tighten. Ticket to Titanic after it hit iceberg. Path B, C-trap, hold line. Realize 5,000-year store of value does not become worthless because algorithm painted red candle. Price is what you pay, value is what you get. At 83, they are giving away only asset that survives what is coming. This crash is not disaster, it is gift. If you can find physical metal, if you can find dealer with actual inventory, buy it aggressively. Trade their fake dying paper for real eternal atoms. Drain every ounce from system until unobtainium becomes unobtainium for them too. This is war, financial war. And war has sides. You can be on side that trades real wealth for paper promises, or you can be on side that trades paper promises for real wealth. Choose now, because this window will not stay open forever. Paper market is dying. Thrashing in death throes. Physical market is eternal. This manipulation will fail, must fail, because at end of day, they can print infinite dollars, but they cannot print 1 ounce of silver, cannot print gold, cannot print trust. Do not let them steal your future. Do not let them scare you out of legacy. 12 trillion gone from screens, but wealth still there, for those brave enough to hold it. Monday, February 2nd, 2026. Day they tried to kill silver. They failed because you saw through it. Price is fake, war is real, here is what you do now. If you sold in panic, do not beat yourself up. Learn from it. Position smarter next time. If you held, congratulations, you just passed test most fail. If you bought the dip, you are warrior, keep stacking. And if you are still on fence, still deciding, here's final word. Markets reward courage, punish fear, destroy indecision. Physical silver at these levels is gift from financial gods. Wrapped in scary headlines to keep crowds away, unwrap it, take it, guard it. Because when this spring releases, when debt spiral accelerates, when printers fire up again, you will look back on this moment as most important financial decision you ever made. They tried to break you today. You did not break. Now show them what happens when they push too far. Stack harder, stack smarter, stack relentlessly. The war is not over. It just got started.